Hello and welcome to Martin Lucas Investor. Today, in about 32 minutes' time, we're going to have jobs data. This is the last data release before the FOMC meeting. This could be make or break for rate cuts. So, market's going to be volatile and we will be covering it all together. So, thank you for tuning in. We're getting data, private data here today. It is a very high impact story. I'll bring it up all on the screen in a second. So thank you everyone for tuning in to the morning forecast show. We're live every single morning about 2 hours before the opening bell. And then we go over to Martyn, and then Martyn covers the opening bell. So we are 32 minutes away from the ADP employment change data that's coming out. This is the most high impact story of the day, probably of the week, as well, going into FOMC, where we are expecting rate cuts next week. So let's get into all the data. Let me just show you exactly what we're looking at right now. So go over to this screen over here. We are looking at jobs data. The timer is right below me for when that is coming out. But if we go over to any sort of economic calendar, you can see right now in about 31 minutes time, we've got ADP employment change November. You can see it's marked in red. It's a high impact story. And what makes it even more high impact is because it's the US, the largest economy in the world. The consensus is 5,000. If I move my head a little bit, you can see the consensus is 5,000 and the previous was 42,000. So it's not looking good. And that's why the lower it is, the more likely we have rate cuts. But if it's too low, then we're looking at recession. So there's a fine balance. It's the narrative right now is what's it called? Bad news is good news. If jobs are low, that's good news because we get rate cuts. But there is a certain extent you can go. If the jobs are awful, then what happens if it's less than 5,000, for example, today, and we'll look into numbers. If it's less than 5,000, then it's actually recession territory, and it's too many jobs are being lost, or not enough jobs are being created. So why does this event matter to traders? Well, traders often consider employment figures from ADP, America's largest payroll provider, report as the harbinger of Bureau of Labor Statistics release on non-farm payrolls, usually published 2 days later, because of the correlation between the two. So this is sort of giving us an insight of what the official data will be, but also this is official data. Don't forget that. Just because it's private data, sometimes private data is more accurate than government data. So we've got America's largest payroll provider providing us with this data today, and the markets are getting ready for it in less than half an hour now. So the layering of both series is quite high, but on an individual months, the discrepancy can be substantial. Another reason FX traders follow this report is the same with the NFP. A persistent vigorous growth in employment figures increases inflationary figures, and with it, the likelihood that the Fed will increase interest rates. Actual figures beating consensus tend to be USD bullish. Anyway, we're not FX traders here. We want to see what it means for the market. So 29 minutes until the ADP employment change. If you have just tuned in, please make sure you have hit that like button and you are also subscribing. It takes 1 second, it's free, so please do it. Let's get into all the figures that actually matter. So straight over to our own newsletter, released every single morning. Today's stories at a glance. We've got Vanguard allowing crypto trading. I mean, that's massive. They don't have their own ETFs. They haven't gone that far. But earlier this year, they essentially put a ban on ETFs. They weren't going to have ETFs as on their platform. Millions of people use Vanguard's platform. Millions of people, or hundreds of thousands, have lots of money within their Vanguard accounts, and now they can buy. And when we say crypto trading, we're not saying they're going to derivatives trade or leverage trade Bitcoin. They can buy Bitcoin as a spot position. So this asset giant now permits clients to trade regulated crypto ETFs, reversing its long-standing ban. Big story. We're going to come on to the jobs data. I just want to give you a rundown of the top stories. We've got the UK legalizing digital property. Legalizes digital property. So essentially, crypto is now considered property, which gives more rights to crypto holders. We've got Bitcoin really surging back to the upside at 93,000. If we break that 95,000 barrier, that can take us to that psychological level of 100,000, and the Also, there is a moving average at 103,000. If we can get back above that, then we do actually have another hope of keeping this bull market alive. But we'll keep an eye on it. Right now, we're looking at 95,000 for a break of trend. Rate cuts, bet surges. So we've got rate cut bets right now sat at 87%. Very, very high. And this is, remember, we covered last month's FOMC, and Jerome Powell gave indications that um, they're not looking to cut rates. He gave quite a strong indication that he wasn't looking to cut rates in December. However, the market has gone ahead and priced 87% chance of a rate cut. Well, that will change in the next 26 minutes because we're going to get some more employment numbers. So if we don't get a rate cut, that will be really bad for the markets. It might be the first time that the consensus is wrong. So we'll keep an eye on that, but rate cut bets are surging. Markets are rallying on rumors of a dovish shadow chair potentially replacing Powell in 2026. We've talked about that yesterday. There's more stories on it today. AI is causing chip shortages, and also we've got that big story, Trump accounts, which is, I'm sure most of you have heard about it by now. Vaz covered it yesterday on the show. Remember, this is your one-stop show for everything, any big announcements, any daily shows, whether the market has lots of announcement or no announcements. We're live all the time, so always make sure you're subscribed. There was a Trump accounts announcement yesterday, and there's some underlying things in that that's actually pretty good for the US economy. So that is our deep dive today. But let's come back to the main focus of today's show, which is the ADP numbers coming out. So the ADP report is dropping at 8:15 Eastern time. That is in 25 minutes time. It is a precursor to the government data coming in a couple days time. It is deciding factor for the Federal Reserve's December policy. We're going to have let me just see if I can move this up slightly. There we go. That looks better. This is what they're going to go off for next week's FOMC report. So, markets are pricing in a stark deceleration. It is actually already, the markets are pricing in pretty bad numbers already. So, they're pricing in a creation of just 5,000 new jobs. That's not very good, but that's what the market's pricing in. That's why rate cut expectations are quite high, because if jobs are failing and we're going to recession, the Fed needs to, remember, they've got a dual mandate. They need to keep inflation under control. How do they do that? Well, they keep rates high. But they also need to make sure the economy's good and there's new jobs are being created and we're not going to a recession and unemployment's not going up. How do they do that? Well, they bring rates down. So it's a very fine balance between the two. And the reason the market is pricing in rate cuts is because they're looking at data like this and saying, wow, not many jobs are being created there's not many jobs being created. The economy's not looking great in terms of jobs and unemployment. So the Fed must cut rates. That's how they're starting to price this in, and a figure like 5,000 is not very good, but that's why we're getting rate cuts, or expectation of rate cuts. So 5,000 is not confirmed yet. That's what's going to be confirmed in 23 minutes time. If you have just tuned in, please just take a second to hit that like button, and make sure you are subscribed as well. If you haven't got the daily newsletter, it always gets you prepared for the day. It puts hours of research in. I guess the newsletter might be a 10-minute read from top to bottom. You can skip through certain sections, but I recommend reading it all because it really does get you prepared for the day. And not only that, over time, you become much more knowledgeable in the market, so you can make better decisions. So I'm going to give you that link. It's got a 1-week free trial. It's in the chat. That's on the annual plan, the 1-week free trial. You can also get the free plan, and at least get the headlines of the day and the one big thing. And there's also a monthly plan if you prefer it monthly. So let's continue. 22 minutes time until the ADP numbers come out. Markets are pricing in a stark deceleration. The market has already priced in that there's only going to be 5,000 new jobs created. A collapse from October levels that would validate weekly data showing private sector contraction. The stakes for your portfolio are binary. So these are the exact numbers we need to look at. If it's 5,000 or less, we're looking even negative, no jobs being created, jobs being lost. That is a recession trade. People will start, in my opinion, again, there could be specific things within the data that doesn't mean this happens, but in my opinion, again, not financial advice, I'm not telling you to do anything, I'm just trying to give you my own opinions and thoughts. If it's less than 5,000 or negative, I believe the recession trade narrative will become pretty mainstream. I think people will start getting worried. I think there'll be a sell-off, and I think we can pretty much confirm that there will be a December rate cut if we do go negative on the ADP numbers. So a December rate cut becomes a mathematical certainty, 95% odds, sending Treasury yields plunging and crushing the US dollar on capital as capital flees to the euro and yen. However, if we get ADP beating, if it's 10,000, 20,000, 40,000 and above, let's say, that will catch the market off guard because, as I've just said, as what the market is pricing in, the consensus is right now it's 5,000. That's what the market's pricing in. Anything extreme to either side will be the market being caught offside. If it's negative 10,000, if it's positive 40,000, that is the market being caught off guard. And if it does beat and there is more jobs being created, there will be a surprise resurgence in hiring, would force a violent repricing of rate cut bets, triggering a sharp dollar rally and a sell-off in bonds for higher or for longer fears resurface. That's when we will see there's no need to cut rates. And Jerome Powell's, how he spoke last time in the FOMC, it suggested he doesn't actually want to cut rates in December. So if he gets the reason not to cut rates, for example, the jobs market is pretty strong and much stronger than expected, he will not cut rates. The market won't like that because the market will also say, we're not getting rate cuts. And right now, the market really wants rate cuts. All retail investors want rate cuts. President Trump wants rate cuts. And if we don't get rate cuts, or if we get an indication from today's data that we're not going to get any rate cuts, the market won't like that either. So what we're really looking for here is consensus. We want it to be around 5,000 because that's not a surprise to the market. The market's already pricing in rate cuts. We don't need it to be lower because if it's much lower than 5,000 or if it's negative, that actually suggests we're in a recession, and that's, even though we're more it's a very fine line. People think rate cuts are just amazing. We always want rate cuts, rate cuts, rate cuts, rate cuts. However, there's a certain point when rate cuts are bad. If we are negative today and we have 10,000 jobs lost from the ADP figures, we are guaranteed to have a rate cut, but the market will not like it. Why? Well, because it shows that we're in a recession, or we're entering a recession, or it shows that Jerome Powell was too late. We're guaranteed to get rate cuts. So some would say, okay, if we're going to guarantee to get rate cut, I want to be guaranteed to get rate cut because that's great for the markets. That's untrue. Just like an emergency rate cut would be awful for the markets, this will be awful for the market. So we don't want it to be negative. We want it to be around 5,000. If you want rate cuts, you want it to be around 5,000 because it means the recession trade doesn't ignite immediately, but it also means the market will definitely price in a rate cut without fears of a recession. If it's 20,000, 30,000, 40,000, we might not get that rate cut, but the market might not like that because it means we're going to have higher rates for longer to still try and combat inflation when there's no need to combat jobs data if the jobs data is good. So hopefully that makes sense. We'll come back to this right before the report, but that's what's happening in 18 minutes time. You've got the timer right below me, 18 minutes, and we will get that data. Let's see what Bloomberg are saying. They should be covering this today.
Viral post that he had out there, and Mike Kontopoulos of RB Advisors, as we look to a big year of issuance in 2026. From New York, good morning.
No, they're not covering it right now. Let's go on to, we'll keep an eye on this. There is actually more data coming out today. So if I scroll down, we do actually have ISM services, and Martyn might be covering that. That's at 3 p.m. UK time, so that's in 2 hours. I'm sure Martyn will be live to cover that. That's half an hour after the opening bell. You've got ISM services. Excuse me, guys. I don't know. I've got a really blocked up system right now internally. Anyway, ISM services. PMI will be coming out at 3 p.m. UK time. That's I do apologize. That's 30 minutes after the opening bell. That's the Institution for Supply Management Services purchasing Manager Index reveals the current conditions of the US services sector, which has historically been a large GDP contributor. So this is a very really important event, but that's not coming up first. I would say the ADP employment change, the market will be looking at that more, but the ISM is also sort of very important as well, and that's coming out at 3 p.m. So we'll be covering that and giving you more analysis around that time in about 2 hours' time. Let's go over to some of our stories in the newsletter and we'll come back to this ADP figure coming out in 15 minutes. So if you haven't got the newsletter yet, please do consider signing up. Don't die on YouTube. Yeah, that would be bad. Let me go over to your comments and see what everyone is saying before we come on to the main story as well. So, oh god, that timer's on my face. Let me. Sorry about this. That's the time. Okay, so I sold 20,000 silver to buy XRP. Wow. Congratulations. I think obviously silver's been doing well. I'm still very bullish on silver. I think silver might even outperform XRP in the short term, depending if the bull market will continue for XRP. For example, XRP can go into maybe a bear market, go down to $151, and silver can continue going up to $75, $100. Or it could be vice versa. Silver will go down and XRP will go up. If I had to choose, I would say silver will probably go up and XRP might enter a bear market. However, long term, I think XRP will outperform silver. So I don't hate your trade. Congratulations to you, and I hope it does well. You need some Lemsip. I need something. I don't know what's going on. Does my voice sound different? I'm hearing myself differently. Rate cut in America will put housing market back to business. People need to stop buying because the payments. People stop buying because the payments are high. Yes, it's always a concern when we have high rates. We don't want it, but we also don't want high inflation. It's an excellent newsletter. Thank you very much. You're not even a member and you're saying that. I love it. Yeah, it's a full newsletter. If I just show you, if I go back to this screen for a second, where is the screen? Here it is. I'll just quickly give you a synopsis of what the newsletter looks like every day. You've got obviously all the top stories at a glance, so you can see exactly what's going on very quickly. You've got the one big thing, the fear and greed index, just so you can see it's our very own fear and greed index. Obviously, we get the data from other places, but you won't see that anywhere else. You've got the number that matters, $95,000 resistance. We're looking to break that to go to 100,000. So you've just got the number, you've got the market snapshot. You've got the 5 things you need to know every single day. So the top stories of the day, you've got it in 2 very concise paragraphs, but with all the insights you need. You've also got my thoughts at the end at the bottom of each of these as well. We've got Bitcoin, Vanguard, we've got the Fed pivot, we've got the AI squeeze, we've got lots of stories there. We've got the deep dive today is about capital flows around the new Trump accounts. So if you saw the announcement yesterday, but you want to dive deeper into exactly what that means and what it means for the economy, where it's all in the deep dive. And then you've got the chart of the day every day, which is today is all about Bitcoin. So you get that every day. It's sort of a website like this where you get all the news stories. Let me go back to the chat. I'll give you let me give you the link in the chat as well. Where were we? So there's what happened there? Yeah, there's a link in the chat. You also obviously that's just the daily newsletter. You get the Saturn newsletter. You'll get the 4D. Good suggestion. Yeah, you get the Saturn newsletter. You get the XRP weekly newsletter that's coming out. You're going to get access to the app. You're going to get the portfolio insights out. You're going to get access to a budget planner, a debt planner, more and more features added. So it's not just a newsletter. That's sort of the beginning. Let me go through your comments. The rates for housing loans has nothing to do with rate cuts. Last time a rate cut was made, the rates actually went up. Yeah, but long term it does. It's not immediate. I completely know what you're saying, ECA. That is very true. Rate cuts doesn't automatically equal housing. It doesn't equal housing interest rates or mortgage rates to go down. In fact, rate cuts can come down and it can go up even in the long term. However, one of the main reasons that it will come down is because of rate cuts. So over the long term, it's more likely to see if rate cuts come down, mortgage rates will come down as well. You can simplify it to that way, and it also the data would back that up. Even though I know there's specific instances where rate cuts go down, housing rates go up. It's not as simple as saying rates come down, mortgage rates go down. Yes, I completely agree. It's not as simple as that. You sold silver for XRP. What were you thinking? Silver moves. Silver moves XRP. Sensei, would be really cool if your wife drew 3 of you and put it on a mug. Just a thought, maybe with Rooster in the background. Paul Dean, thank you very much. I will see. I'll take that into account. We have a weakening labor market and the stubbornly high inflation. Let me see if I can make this bigger. Well, I don't know why it's so small. We have a weakening labor market and a stubbornly high inflation. It's not clear to me that even a small Fed rate cut is called for. It's not about where inflation is today. We're 10 minutes away from the data coming out, so do stay with us. So it's not about where inflation is today. It's very much about the projections of where inflation is going. And by 90% of the projections, we are looking at inflation heading back down to around 2%. Maybe the projections are more likely to be around 2.5%. But just seeing those projections, it gives enough reasons for a rate cut. So you don't have to, you look 12 months ahead and you say, where is inflation going to be in 6 months, 12 months? And if it is trending towards 2%, then you do cut rates until a rate where you think is restrictive enough. And right now, I would say 90% of analysts would say it can afford to go down at least one more time. After December's rate cut, that's when it becomes very tricky. Some people say no more rate cuts. Some people say a couple more rate cuts. Some people say 4 more rate cuts or 4 more 25 basis point rate cuts. That's when it becomes tricky. But everyone is agreeing that the restrictive rate is at least another 25 basis points lower, which would mean a December rate cut or a January rate cut is very much in the cards. 2026 is when it gets difficult. And that's when we probably won't see any rate cuts until the new Fed chair in May. So, yeah. So what did you say? So did you say that what the P was yesterday? Wondering if I missed it. No. Well, the P will be announced. I would say probably January the 1st, after Christmas. Yeah, Paul D, I know what you mean. I think I might die on YouTube this morning. I have no idea what's going on. I apologize. So let me see if there's any more comments. If not, we'll go back to the data. Who was here first? Potato Family. Hello, this is my second day as a member. Potato Family, it's wonderful to have you here as a member. Yolanda is here. Yolanda, thank you so much for your support. Always here. Always great, kind words. And always eager to learn. So we love it. Yolanda, thank you very much for always being here and welcoming in our new guests. I've got 2 questions for you. Is the 21 shares XRP ETF live? I think it is, yes. What is the difference between buying XRP and buying an XRP ETF? Well, the difference is if you buy XRP, let's say on Coinbase or Robinhood, you've bought XRP, you've bought spot XRP, which is great. And then you can actually withdraw that XRP. So you can move that XRP onto a ledger. It's your XRP. You can make it be your own keys. It's your own XRP. Does it mean anything different? We might be able to get a better price for it. And once you buy it, after you pay the fees for the exchange, you don't pay any ongoing management fees. If you buy the ETF, for 99% of people, it's probably actually safer because you won't lose your ledger. It won't be stuck in a fire. You won't accidentally get scammed. You won't send it to the wrong address. You buy a stock, whether it's the ticker is XRP or whatever. You buy one of these XRP spot ETFs. You buy the ETF and the asset manager goes ahead and goes and buys the XRP on your behalf. And they hold it, normally about 1-to-1 or 95%. They'll have the allocation of the XRP. So they'll hold it behind the scenes. They hold it for you. It's secure. It's not going anywhere. They're very large asset managers. Even if they go bankrupt, they actually hold the asset, so they'll be able to pay you out. It's safer because you actually hold the stock note. Um, you won't really be scammed. No one can really steal your shares. It's much harder. Um, what else? But you have to pay a management fee for that service that they provide to you, and you can obviously put it in. And major advantages, and depending on what jurisdiction you're in, you can probably put it in a tax advantage account. So in the US, you might be able to put it in your IRA. In Canada, you might be able to put it in your tax advantage account there. In the UK, if it was in the UK, but we don't have the ETF in the UK for XRP, I would be able to put it into my ISA, tax-free return. So you can buy this and put it into an ISA. Very few countries actually have capital. If you buy crypto just randomly, you don't have any tax advantages. You'll have to pay your capital gains tax at the normal rate. So it also gives you that advantage. But for that pleasure, for that service, you will pay a management fee. So it might be 0.25% a year, might be 0.5% a year. But it's pretty low because all they're doing is buying their XRP and holding it. So to me, if I had access to an XRP ETF, I wouldn't even bother buying XRP on Coinbase. I wouldn't care if I've got XRP in my ledger. I would just go ahead and buy the ETF. Again, not financial advice, do your own research, but those are the differences. I hope that answers your question. We're coming on to our figures now. We're 5 minutes away from the ADP figures. This is going to make or break the rate cuts for December. We're already pricing in very, very high chances of a rate cut. This could change that. It could change it to the upside where we don't price in a rate cut and the markets go down. It could even be worse. It could be no jobs created. We're negative on the jobs. We will 100% chance have a rate cut, but only because we're entering a recession. So it can go two ways today, or it can be at consensus. I'll run you through the numbers again right before we get... why is that? I think that time is actually wrong. 1 second. Have I got this timer wrong? 1:15. Oh, no, I haven't. My clock is wrong. Interesting. That's really strange. No, we're good. Yeah, 5 minutes until the data gets released. Okay. Let me go back to your comments. I bought some XRP. I bought some of the XRP Amplified Premium 3% ETF. Curious of the return. Yeah, that ETF is... I wouldn't buy that. Those leveraged ETFs, the fees are very high, and they're designed for short-term trades. They're designed for holding it for a week, 2 weeks. They're not designed for long-term holding because it will just eat away at your returns. So yeah, those require more research. Those aren't as easy as buying and holding. Those ones is more like a short-term trade. You buy leveraged ETFs. Anyway, I apologize again. I don't know what's going on with my voice and everything. So let's go back to our own newsletter. The link is in the live chat. If you want to subscribe, there is a free plan as well. Let me reiterate what's happening in 5 minutes time. So we've got Bloomberg open, ready for those numbers. Yeah, monthly ADP jobs data due at 8:15 Eastern time. That's in about 4 minutes time now. We've got all the data over here as well. So we'll be watching it in 4 minutes time. We're going to have all the data for you. I'm going to fast forward Bloomberg. Even though I am live on Bloomberg, this is a top tip. Even if you're watching our shows, you can go to the cogs and actually go playback speed, go to 4x. It will actually go fast and you'll be even more up to date, even though it says live. So make sure you are live with me right now by clicking that live button under the show. And then you can also fast forward it so you get the numbers exactly when they come out with me. ADP numbers are coming out. What is ADP? Well, it is the US's largest payroll provider. They've got their own private data. This comes 2 days before the sort of the government data, but sometimes this is actually more accurate than the government data. A lot of people will be watching this. This is a high impact. You can see this is high impact. This is boldly in red. This is high impact. You can't really get much more high impact than this, apart from maybe a CPI data release. What is happening? Well, and what is the consensus? The consensus is 5,000 jobs being created. That is the consensus. What does that mean by consensus? That's what the market is pricing. Right now, the market believes that there'll be 5,000 jobs created, and everything on the market is based off that. So if you look at, for example, rate cut expectations, there's an 87% chance of a rate cut at the December 10th meeting. That's also based off this. What will happen either way? Make sure you have hit that like button. We're 2 minutes away. If you want the data, if you appreciate us being live, just hit that like button. It's free, and please do subscribe. Markets are pricing in quite a stark deceleration. It is already a stark deceleration to 5,000 new jobs. That's not a great figure. That's why rate cuts expectations are higher, because the lower the jobs, the higher chance we get a rate cut. However, this is the two things you need to know. If ADP misses, and what we mean by miss is go below 5,000 or go into the negative territory, that actually indicates recession coming soon. You will see headlines, you'll see people selling off. And this is my opinion. Again, I don't want you to just baselessly trade off. If it goes below 5,000, just go short in the market. There is different things to it, and I might be wrong. But from how I've covered all these data releases, I believe if it goes between 5,000 and less, we might have a higher chance of a rate cut. Rate cut expectations might go to 100%. But if it's really negative, what we will see is people starting to sell off, because they will start saying the economy's in a bad place, we're going to get a recession. That will Treasury yields go down, US capital flees to euro yen, people won't be very confident in the US, and we'll get a sell-off. The lower, the more negative it is, the worse the sell-off will be. If it's just 5,000 or slightly below, it won't be that bad. However, if ADP beats, if we've got 10,000 jobs created, 20,000, 40,000 jobs created, what will actually happen is probably the market might sell off. Why? Well, it is good news, but market wants rate cuts. So if they see more jobs being created, they will say the rates are going to stay higher for longer so we can combat inflation. There's no point to combat the jobs market. So here we go. 51
seeing a decline of 32,000 jobs. Last week was revised upwards, so we saw 47,000 jobs created versus the 42,000 initially reported. This is the ADP employment change, and this doesn't always cohere with what we see from non-farm payrolls. However, in the absence of non-farm payrolls and in the consistency of this series, this has increasing weight. Enda Curran joins us now of Bloomberg. Enda, what do you see from these numbers?
Well, at face value, Lisa, as you're saying, it's clearly a negative read on the labour market, coming in much weaker than expected. Economists had expected maybe around plus 10,000 jobs, but it actually came in, as you say, negative 30,000, and weakness by the looks of it across the board, jobs being lost in goods and services. Now, this does lean into what the kind of other sentiment or survey indicators had been telling us, that the labour market is softening, that we're moving from low hiring, low firing to something else. Of course, we've had headlines from big brand name companies, the likes of Verizon and Apple, cutting staff or announcing layoffs over recent weeks. So in the context, as you explained, where we don't have the official data from the BLS, there's a lot of weight being put on this ADP set of numbers. It's the last read we'll have really on the jobs market before next week's Fed meeting. And as I say, at face value, this suggests that the employment market continues to soften at the very least.
Yeah, and what we're seeing right now is that decline of 32,000 jobs is now at the lowest level that we've seen in this ADP series going back to March 31st, 2023. And Curran, thank you so much for that. You are seeing yields fall in response to that. Just taking a look at 2s, 10s, and 30s. On the front end, very much increasing bets of a Fed rate cut, now down 3 basis points at the front end. Similar kind of move as the 10-year. What you are hearing in terms of some of the commentary from ADP, they said while November's slowdown was broad-based, it was led by a pullback among small businesses. We'll dive into that a little bit more coming up. Time now for the morning calls. First up, Stifel raising its price target on Marvel to $114, highlighting its accelerating strength in data center connectivity. Next up, Bank of America raising its target on ASML to $1,331, naming the chipmaker one of its 25 stocks for 2026. Those shares up 0.9%. And finally, Wells Fargo initiating coverage of Oracle with an overweight rating, calling it an emerging leader in the AI supercycle. Those shares up 1.9% in pre-market trade. Sticking with AI, companies across industries racing to utilize the emerging technology, with several travel firms integrating AI into their services. Joining us now for more is Bridget Zimmerman, the Chief Commercial Officer and incoming CEO of Priceline, a major online travel agency. Bridget, thank you so much for being with us. Before we get into AI and how it's transforming the business, I'd love your read on the consumer, because we're getting really mixed messages about the state of spending, the state of consumer spending in the United States. What's your read on just how much demand there is for discretionary spending like travel?
I mean, I think all you have to do is look at what happened over the Thanksgiving holiday. We saw a record level of travel hitting the U.S. Over Thanksgiving, a record number of people passing through the TSA PreCheck on Sunday. So I think the consumer's telling us that they really value travel, that they have some money to spend, and they're going to spend it in the places that matter to them most. And travel is absolutely one of those places, particularly around the holidays.
Are you seeing this across consumer cohorts, though, or is it really just the upper-end consumer that is really able to spend when it comes to things like travel?
Yeah, absolutely. I mean, I think we've heard from a lot of our partners in the industry, our airline partners in particular, who have talked in their earnings calls about the premium customer, the premium cabin being full. But particularly, again, as we look back at Thanksgiving, we are seeing that across a broad cohort. I think our consumers in the U.S. are telling us that they do prioritize spending on travel, particularly around the holidays. If we go back and we look at prior holidays, Memorial Day, if we look at Labor Day, we are seeing the same type of trends. This is the moment that matters to the consumer, and they're going to put their look into next year for new types of travel. We just released our new travel trends report for 2026, and we see the consumers shifting a little bit in terms of how they want to take trips. So some shorter travels, we call it little treat travel. So very its DNA. We've been doing this for the last 27 years and really reinventing how consumers interact and find and shop and book travel. So we were one of the early companies who really leaned into the use of generative AI. We've been using machine learning and AI for years, but this is kind of the next frontier, and we're actually really excited about it. We have a chatbot called Penny. She's your virtual travel assistant or your travel assistant. You can now speak to her as well as chat with her, but she can do everything from help you figure out where you want to go to help you understand what's happening in the neighborhood around you and in that destination that you might want to travel to, all the way to helping you service your trip if something goes wrong or if you need to ask a question. So no longer do you necessarily need to call in and talk to an agent for everything. You can interact with Penny, whether that's by voice or whether that's chatting with her by normal chat methods. And so it's been a really wonderful piece of technology for us. And besides just leveraging it for our consumer, we're also using it in all parts of how we think about our business. So how we arm our employees, how we arm our agents in speaking with consumers. So it's really running through the totality of our business.
One question has been, how much is it superseding the need to hire people? You're talking about phone agents and things of that nature. We have heard the Anthropic chief scientist was saying that artificial intelligence and chatbots could disrupt a lot of white-collar work, particularly when you get generative AI in the next 5 years. I just wonder how much it is superseding your need for humans to play those roles.
Listen, it's still early days. I think we're going to wait and see. Right now, we are just trying to leverage it everywhere that we can and try and make ourselves more efficient. There's a lot of innovation still to be done. So ultimately, we'll see where it goes over time, but really figuring out how to make ourselves more effective in everyday life.
Bridget, are you still using OpenAI for Penny, or are you willing to broaden out, maybe look at some others?
And we're still using OpenAI for Penny, but we are partnering with all of the big LLMs. We understand that how consumers shop may change over time, and we need to be partnering with every single one of them. So we've got a lot of great partnerships in the industry, and we keep pursuing that to make sure that we stay on the forefront of the new technology and all of the changes that are coming through.
As you take on this role starting January of CEO, how much do you view the job changing in the realm of AI? How much of your time is spent on making sure you are keeping up with the AI every single day around this table?
I mean,
Okay, I'm trying something different. Let's please hope this doesn't cause any problems. I have no idea what's going on there. This won't. This is something I'm gonna fix so it doesn't happen again. Obviously, when we take a few steps forward, we take one step back, and that's one of the steps back. So I apologize for that. That was a really bad timing, and that won't happen again. We did get the ADP figures. Let me just see if I can hear myself properly. Let me see.
We've got, and what they do portray is a negative picture of the employment backdrop in the United States. A decline of 32.
really figure.
And obviously, when we take a few steps forward, we take one step back, and that's one of the steps back. So I apologize for that. That was a really bad timing, and that won't happen.
Non-farm payrolls, but the commentary coming out of ADP with Neil Richardson, the chief economist there, saying we've got, and what they do portray is a negative picture of the employment backdrop.
Really figure.
And obviously, when we take a few steps forward. Okay, now you've got echo. Okay, I'm just gonna not. This stream is. We're ending the stream anyway. We're going over to Martyn. So we did manage to cover some of it. Goodness, that was awful. That was very stressful. I apologize for that. I'll try and figure out what went wrong there, and so it doesn't happen again. So the ADP numbers came out. We were expecting around 10,000, 5,000. It actually fell by 32,000. We're hearing your voice recorded. Yeah, it should be good now. I should have nothing going on now. Gone over to a backup microphone while this one is getting fixed. Let me just check. Okay. Okay, I'll just speak. I won't put the microphone on. Okay, so 32,000. I'm so sorry. That shouldn't have happened, and it did happen, and I will fix it for tomorrow. We're live 2 hours before every opening bell. At least I gave you all the information before the number came out. So yeah, we did get negative 32. I actually would have expected that would have caused quite a bigger sell-off in the markets than what we're seeing right now. If we go over to S&P 500, that is, yeah, it didn't like the number, but it's not reacting too heavily. If we go over to the Fed Watch tool, which hasn't updated probably. I would now, yeah, it's going up. This is going to go up. This is going to go into 90% plus now. With that figure we just received, the chance of a rate cut is now increasing. We've got the jobs market is not looking good. Don't worry, mate. Stuff happens. Yeah. Negative 32,000 is very bad. Correct. Yes, it is bad. Volume is low. I'll bring it up a little bit. Sounds like you're in a tunnel. Well, it's the best I can do right now. I don't know what. I'm so sorry. Wait, is it because both of them are connected? Maybe it's because of that. Let me just... Where's the box gone? Might be a bit better now. So 89% is the probability for a December rate cut. I very much expect by the end of today it will go up to 90% plus. So we are going to get a rate cut in December now, especially after these figures that we've just got today. The figures are not good. The figures suggest we could be heading into a recession. The figures suggest that this recession trade might become a narrative. That's not me saying come out and short the markets. That's me saying be careful, because if the jobs data, just because we are more guaranteed to have a rate cut now, it's not automatically a good thing. The market is pricing it in as potentially not a bad thing, or it's actually pricing it as a good thing because it's not dumping right now. However, in the grand scheme of things, jobs being lost at that rate is recession fears. Recession is not good. Recession would mean rate cuts will come, but it's not good. I see those figures and I'm more confident in having a bit of cash on the side. We've got the carry trade. We've got recession fears now. I would say that this would mean that there is now recession fears in the markets. We will get that backed up by data in 2 days. We've got some more data coming out later today, but in 2 days' time we'll get some more. Let me just make sure. Yeah, rate cut is too late, and let me go over to the screen over here. Rate cut is too late, and a recession is guaranteed now. Yeah, it does. The evidence being shown now from different rate cuts we've seen now, and if I can just from different rate cuts we've seen now, suggests that Jerome Powell was too late. That is correct. From the different numbers we've got recently, it keeps suggesting Jerome Powell should have cut rates. And Martyn said this. Remember, Martyn last year kept saying it's time for a rate cut. It's time for a rate cut. Martyn, the main host of this channel, he kept saying a rate cut is too late. And Martyn was right. It was too late, because now the data is suggesting we're sort of playing catch up and we're trying to do rate cuts after we're now seeing real concerns in the market. So yes, rate cut was late. And a recession, is it guaranteed now? I wouldn't say it's guaranteed, but it's getting more and more likely. Which is good because of the rate cut. What everyone wants, so go up, up and away, which is good for the rate cut. But the market, at one point, it doesn't matter what retail investors want. It matters what actually matters in the market. And if everyone just wants a rate cut and we go into recession, it doesn't mean that the market's going to continue going up because everyone wants a rate cut. I miss SXX. Sorry, you guys liked it. Okay, I'll do it every stream then. Silver up 100% this year. Yeah, we've been super bullish on silver and gold on this channel. Do you want my number? Says Sabak Rumble. But that means more stimmy checks. Does it though? Recession equals more stimmy check. I like. Okay, I'm not going to say I like recessions because it's awful for people and real families. But in terms of, if we just take away the emotion and just look at the market, recession historically has been the best time to buy. So if a recession does happen, I will have money on the side. I do have money on the side. We took some profits at the top of the market. We didn't take as much as we wanted to, and we don't know if we're in a bear market yet. It does look more likely that we are. But if we do enter a recession, I will buy on the way down. I will catch a falling knife. I will just buy every time it drops a certain percentage, and I'm talking stocks and crypto. So not awful there. So in about 1 minute's time, we're going over to Martyn. There is actually another data release in about an hour and a half. I'm sure Martyn will be covering it. Martyn for Fed chair. Yeah, we need Martyn for Fed chair. We need a poll. We need Martyn to be Fed chair. Yes, you got it spot on. The administration didn't make Powell's job easy with the tariff wars. That is true, but even during the Biden administration, they should have started cutting rates earlier. But yeah, I know what you mean. That when the tariff wars start, there's a lot of uncertainty. There is a lot of uncertainty. Okay, here we go. Martyn is now live. He might have his countdown running already. Yeah, Martyn's going live now. Can you put some drum sounds in with the sex? It will make a great beat. I'll let someone else can do an edit. Someone else can clip it and make an edit. We're hearing your voice recorded. Okay, anyway, let's end the show because Martyn's going live. I do, again, apologize about that sound. I'm very, very, very happy that I managed to give all the analysis before that happened. And it did happen. The markets aren't really reacting to the news. Maybe throughout the day they will. Now they're starting to sell off. We'll see what Martyn has to say about it because Martyn obviously is a big investor in the markets. He's got some contacts. He's live now, and I'm sure he'll be reacting to the awful figures we just got from the ADP, which again, some people say the data, no one cares about private data, but this is actually somewhat more accurate than the government data because they're the largest payroll provider. They've got the hard facts, and we were expecting 5,000, 10,000. We've got actually a loss of 32,000 jobs. That means rate cuts are more likely to happen, but it also means we might be heading into a recession, and Jerome Powell was too late. So double-edged sword there. Rate cuts confirmed, but recession might happen as well. Now we're going over to Martyn. I'll be back tomorrow. Do go and check out the newsletter. The newsletter has all the information as well. There it is. There's a free trial on the annual plan. There's a monthly plan, and there's a free plan. Make sure you check it out. Now over to Martyn. Until next time, take care of yourselves